Welcome to The New Next, a podcast that addresses current events and how they will impact the future. Co-hosted by the inquisitive public speaking champion, Mike McVeigh, and energy, economics, and technology expert, Matt Jensen. Join us as we explore all things energy, economic, tech, and political, and how they will affect our future.
Podcasts typically grow by word of mouth. If you know anyone who would enjoy this content, sharing this in a message or by posting on social media would mean the world to us. Thanks for listening, and let's get started.
Well, let's talk about Continental Resources.
Yeah, I don't know what that is, so sure.
So Continental Resources is one of the biggest oil companies here in Oklahoma City, and it's also the company that Aaron, one of our listeners, works for. But
before you mention that, I was going to say Continental Resources is like where the dinosaurs turned into oil, and we go to each continent and we try to get as much dinosaur oil as possible. So Continental Resources, the company, I like a little bit more because they employ my friend Aaron.
So Harold Hamm, who's the founder and CEO of that, offered to buy them out for $25 billion today, and him and his family already own about 80% of the company. So him and his 5 kids. So they're kind of like essentially offering to buy out the last 20% of it. But they're up the last 52 weeks. They're up 75%. Really good profitability currently. 6.8 billion of revenue for the last fiscal year. Quarterly revenue growth is up 82%. But what I found interesting was that their trailing price to earning ratio, which is basically the last 12 months, is 10.73. So that's price versus earnings per share. And usually I think historically the S&P average has been 14 to 17. It's kind of like a mean, and your high growth stocks are obviously going to trade much higher than that. But their forward PE is 6.61. So that kind of means that what they're projecting on the year coming out is, much higher earnings at the current price.
So I know you're giving a lot of statistics that I probably should mean something to me.
Yeah.
Why are we talking about Continental Resources?
Well, other than
the guy I know the guy bought the rest of it, but.
Well, he's proposing, I think they have to vote on it, but since they control 80% of the shareholder shares, they essentially have to just offer a fair price for it. Continental's a really, I don't know, I have a lot of respect for Harold Hamm, for instance.
Okay.
He started this company by hauling water trucks back in the 70s and started investing in oil wells. He's built this thing out. He's always treated his employees and his vendors really well. I think that they were very hesitant to lay people off during, even though they're a public company, during COVID. But he's a good guy. He's also a huge proponent of natural gas or oil and gas in the U.S.
Right.
But looking at this too, I see it as a good opportunity for them to extract value because it's, operating cash flow of $4.44 billion. They're going to be pumping off a lot of cash here in the next couple years, and it's going to be I would say a good buy for him if he can work it out.
Okay.
let's see. So looking at some comparables, 1 second. So EOG Resources, who's a big oil and gas player, independent in the U.S., they're trading at 17 trailing PE, forward PE 7.92. So about, not much difference in the forward PE of Continental. I just don't see, I don't personally see oil prices going down. And kind of like we talked about with Twitter, if Musk previously, if Musk is able to take that private, there's a lot of ways that you can kind of unlock value from it and bring it out to the market in the future with some pretty good statistics. So I guess, the Continental's is trading in line with some of their other comparable companies from a price to earnings ratio, both forward and trailing. But I don't know. I think it's just interesting. It'll be good to see how it goes. And I think, being a public oil and gas company these days is pretty difficult, because a lot of the ESG requirements and other things that they're trying to pass on the SEC to kind of force people to, essentially invest in like forests and stuff like that to offset their carbon.
Right.
So them owing 80% of it already, I don't really see a lot of downside with them taking it private.
If you would like to learn more about the New Next podcast, find us at thenewnextpodcast.com, where you can suggest a topic you would like for us to cover. If you enjoyed what you heard, share the podcast, tell a friend about it, or rate us with 5 stars. We appreciate you.